Thank you for joining us for this month's monthly update. We'll be doing something a bit different today. I'll be asking the questions. I'm joined here by Ian Yuen, Associate at Frontier Advisors. Hi, Ian.
Hi, Casey.
Let's start with the big picture. Can you tell us or give us an update on the global economy?
Sure. In the the U.S. Central Bank had a meeting early this month and decided not to change their policy rate but keep it at 0.75% to 1% range. The last rate change was in March, which was the third rate hike since the global financial crisis. Currently, market participants expect two additional rate hikes over the course of this year. U.S. corporate earnings have been very strong with a positive economic backdrop, such as low unemployment rate and continued positive manufacturing and services PMI survey results. All of them are supportive of the Fed's continuing to tighten its monetary policy of the year. So overall, the U.S. economy is growing, although it's slow, and the inflation pressures are gradually building there. Across the pond in Europe, there still remains some political uncertainties, including the Brexit negotiations between the European Union and the UK. However, the slow growth is happening in Europe as well, with positive growth, GDP growth figures in that region, particularly robust in Germany. So it raises the chances of the European central banks phasing out its quantitative easing in coming years. And we think they will learn from the US and err on the side of caution when they start tightening its monetary policy.
Thanks for that, Ian. How about domestically? How's the Australian economy doing?
The Australian dollar has depreciated against major currencies recently, mostly driven by a sell-off in commodities, oil and iron ore, especially iron ore, which dropped almost 20% of the month. There are a couple of reasons. One is in the US, US shale production has rebounded, and another is in China, commodities in China have been under pressure since late March as the central bank has tightened liquidity there. In equity markets in Australia, the prices were quite subdued due to weak energy sectors and banking sector after the release of the federal budget.
Let's move on to one of Australia's largest trading partner, China. Could you give us an update there, please?
Sure. Chinese President Xi Jinping has called on authorities to prioritize financial security this year. We think that's related to the National Congress later this year, which will elect the new leadership in China. So the central bank in China has tightened liquidity there, and also fiscal stimulus in fixed assets appears to be fading. In April, growth rates in both imports and exports slowed markedly compared to the previous month, and also the manufacturing and services PMIs decreased, although they remain pointing to the expansionary direction.
Thank you for that update, Ian. And thank you for joining us for this month's monthly update.